Hi everyone, welcome to February, and what a welcome, sorry to say, so you'll know. And I thought I'd let the dust settle for a couple of days just to see what happens with the banks. And so RBA increased by 0.25 and all of the banks are following. So just assume that if you're sitting on a variable rate, your rate is going to increase by 0.25, and that will be effective probably Friday of next week or the Monday or the Tuesday of the following week. So they do give us a few days breathing space before they actually implement it. So why has this happened? It's the inflation story, as it has been for, it feels like ever. We're still above the top end of the band that the RBA sets, and they actually don't think it's going to fall into the midpoint of that band for another 2 years. So what does that say? Rate rises are rarely one and done. It's the same with rate cuts. So the next major inflation number is due out in April, and so the May board meeting is an important one, and if it doesn't happen then it might be the second half of the year, and that will probably be another rate rise. They'll just want more time to assess the data that's coming through. So why is inflation still high? Well, if you listen to the governor, she focused on private demand, so that's what you and me and businesses are spending. Maybe that was a wee bit political that she didn't blame the government, but the other side of that is the government expenditure, and we all know how much money the government's spending. And in Victoria, we certainly know, because we know how much debt there is. And then the third factor is productivity. So how much output is being pushed out per person or per hour. And productivity is just going nowhere in this country, and somehow someone needs to fix it. And it's down to federal and state governments to help with that. And it just doesn't seem that we're getting anywhere. So we kind of feel like we're just going round and round in circles at the moment. So anyway, all variable rates have increased. So looking at fixed rates, so that's obviously a conversation now. Now, most people's experience of fixed rates was only through COVID, because you're getting fixed rates for 2%, and it was like a no-brainer. What could go wrong if you're fixing at 2%? And you were absolutely right. Now the story is very different. So after the variable rate rise, fixed rates are sitting at about that variable rate that you're going to be on. There or thereabouts. So you're not fixing because you think you're going to make money, because you think you're going to beat the bank. You're just doing it for peace of mind. You're going to lose some flexibility because of the type of loan it is, and it's effectively an insurance policy. Okay. So we are having more conversations with clients about this, and I have got a nice wee spreadsheet, which I'm very proud of, that I've created. And so click on our website and just book in a 15-minute call or Zoom, and we can run through it together, and I can just show you the difference that it can or cannot make by fixing either all of your loan or a portion of your loan. What will happen to the property market? Well, watch Harry's video if you're a first-time buyer, because he's got some great stuff there. For the rest of the market, probably it won't help it. So a bit more softness, certainly in Victoria back end of last year. The market just didn't seem to really get moving. Agents were complaining about lack of stock. And so it's sort of like feeds itself, because if you want to sell but you can't find anything to buy, then you're not going to put your own property on the market. So the market gets a bit stuck. Anyway, try and enjoy the rest of February. We're always here for you. Speak soon. Bye.